Ray Dalio, a serial entrepreneur, best-selling author, and investing millionaire, currently has a net worth of $14 billion. What many people are unaware of is that he began building his fortune as a 12-year-old kid with only $300. In today's video, we'll go through how he built his incredible wealth and what you can learn from his experience. We'll cover his most fundamental investment principles, which he's followed all his life. And make sure to stick around to the end, as we will share Ray Dalio's 5-step process that anyone can follow in their life to achieve whatever they want. Welcome back to Profit Protection. Let's dive right in. Ray Dalio has served as the co-chief investment officer at the world's largest hedge fund since 1985, after founding it in 1975. The Harvard University alumnus is currently ranked by Bloomberg as the 79th wealthiest person in the world. Ray Dalio started investing in the stock market at the age of 12 when he was working as a caddy at the Links Golf Club. He often overheard stock market advice and insight from the golfers he waited on. The stock market was very hot in the 1960s. For his first trade, he bought shares of Northeast Airlines for $300. The investment tripled within a month as the airline merged with another company. This trade was the starting point for his incredible journey. After finishing his education, Dalio worked on the floor of the New York Stock Exchange and traded commodity futures. Later, he worked as the director of commodities at Dominic & Dominic LLC. In 1974, he accepted a position as futures trader and broker at Shearson Hayden Stone. In 1975, he founded the investment firm The Bridgewater Associates out of a 2-bedroom apartment in New York City. According to Ray Dalio, the firm is a global macro firm and uses quantitative investment methods. The main purpose of the firm is to structure portfolios based on risk allocations rather than asset allocations. A risk allocation approach diversifies a portfolio based on the risk of each asset class rather than the amount of money in each asset class. Asset classes with lower risk receive a greater allocation, while asset classes with higher risk receive a lesser allocation. When it comes to investing, Ray Dalio is a firm believer in 4 fundamental investment principles. The first one is diversify. Dalio generally says that it's not advisable to keep excess cash idle in a savings account. With current interest rates as low as they are, it's not a smart decision because its value will get depleted by inflation. Sometimes we lose money because of taxes on savings too. In order to prevent savings from losing its value, the best option is to invest the money in a diversified portfolio of assets, which help to increase the value faster than inflation. One of his 3 hedge funds is known as the All-Weather Fund. The All-Weather portfolio is a diversified asset mix introduced by Dalio and popularized by Tony Robbins. The portfolio is designed to suit any weather, i.e. bear market, bull market, recession, or whatever may be the market condition. If you check the historical performance of this portfolio, it holds up to its name. The asset allocation of the portfolio is broken up like this: 40% long-term bonds, 30% stock, 15% intermediate-term bonds, 7.5% gold, and 7.5% commodities. A combination of these will do well in any condition, i.e. the economy either shrinks or grows, or if inflation is lower or higher. If this type of allocation is not possible, diversification of any kind should help insulate against negative developments in the economy. Ray Dalio's second investment principle is this: learn from your mistakes. According to Dalio, life is a matter of mistakes and knowing how to evolve out of those mistakes to avoid repetition. If you solve the mistakes as a puzzle, then it will give you gems. Those gems are the principles in your life. The third principle is understand the allocation of assets. Asset allocation is an investment strategy, which helps to diversify funds among different asset categories like stocks, long-term and short-term bonds, cash, or other instruments. Its main aim is to balance between risk and reward by adjusting the percentage of each asset in a portfolio. I know this might sound a bit technical, but hear me out. It's as easy as this. The asset combination that works best for one may not be suitable for another, as it depends mainly on the time and the ability to tolerate risk. The time is the number of months, years, or the decade you would like to invest in achieving a particular financial goal. For example, if you're investing in a retirement fund, which is needed after 20 years, you don't need to worry about the day-to-day fluctuations in the market. But if your investment is for children who will be entering college within 5 to 6 years, then it is advisable to invest in fixed income assets. And when you are nearing retirement, you should reallocate to fixed income schemes. Risk tolerance refers to the affordability and inclination to lose some or all of your investments. An aggressive investor will be ready to risk losing money to earn better results. But a conservative investor will choose to preserve his investment money. You should have a realistic understanding of your ability and willingness to stomach large swings in the value of your investments. If you take on too much risk, you might panic and sell at the wrong time. Risk tolerance is often associated with age, although that's not the only determining factor. However, in a general sense, people who are younger and have a longer time horizon are often able to and are encouraged to take on greater risk than people older with a shorter term horizon. The fourth investment principle from Ray Dalio is this: use weighted decision making when faced with complex decisions. Decision making is a vital and strenuous task. The decision made must be justified, and it should boost the confidence of stakeholders. The decisions taken should be documented clearly and in a structured way so that others can understand the cause for making that decision in the long run. Making decisions becomes very difficult when there are many alternatives to choose from. In this scenario, each alternative needs to be inspected in depth. There should not be any egocentric considerations when making decisions. Weighted decision making, WDM, is a simple tool which can be used in the process of pondering complex decisions. It enables one to evaluate alternatives based on selected criteria. When a decision needs to be made as a team, then weighted decision-making helps to avoid arguments and enable support. Okay, so that's Ray Dalio's 4 investment strategies that he uses every day. But knowing the investment principles isn't enough to reach your goals. The real secret to successful investing is your mindset. And this is where I will present the 5-step process I teased about at the start of the video. Now, if you made it this far in the video, make sure to hit the like button. According to Dalio, there's a 5-step process that anyone can follow in their life to achieve whatever they want. Here's how it goes. Number 1, have clear goals. Number 2, identify and don't tolerate problems that stand in the way of achieving your goals. Number 3, accurately diagnose the problems to get at their root causes. Number 4, design plans that will get you around them. Number 5, do what's necessary to push these designs through to results. I know what you're thinking. Duh. These are obvious statements, but the proof of the pudding is in the eating, and the efficacy of these steps lie in how well you do them. Consider just 2 questions. A, how often do you do these steps systematically? And B, do you compensate for the steps you are bad at? I bet most of us do some of these steps intuitively. Dalio isn't interested in intuition. Human intuition is inconsistent and often wrong. You can only debug a process if it's systematic and rationally considered. Most of us don't perform these steps nearly as rationally, dispassionately, or as efficiently as Dalio would have us do them. It's too difficult. The draw of Netflix is more powerful than the draw of painful introspection. The other aspect Dalio urges us to consider is that we are all bad at one or more of these steps. No human could possibly be good at all 5. They demand a completely disparate set of skills and mental frameworks. You will find that you are good with several of these steps and bad at others. Part of using the 5-step process is recognizing which steps you're bad at and compensating for them. Now, I won't go any further into this 5-step process as it requires a full video of its own. But if you want me to do that, please leave a comment below. If you are interested in Ray Dalio, I highly recommend you check out our other video where he warns about crypto and Bitcoin being outlawed. If you enjoy this channel and have learned anything from it, please offer your support by liking and subscribing. It helps us to continue bringing you high quality content that both educates and entertains. Once again, thank you for tuning in. See you next time.